Hello everybody, this is Jason and today is Monday, August 15th. It's about 1 o'clock p.m. and the markets are up a little bit today. Just thought I would throw another quick video update because I've been watching this pretty closely the last 2 weeks specifically, and really the last few months, but the last 2 weeks most specifically with these video updates. So what you see here, I just drew a couple lines on a chart to give people an idea. I've been talking, I think, a bit about how the market's recent drop, which you can see right here, I thought eventually we'd get some type of a bounce off this. And so the lines that I drew in here really were just to kind of show two things. This is the last 6 years. If you look all the way back 6 years ago, you can see the markets were higher 6 years ago than they are today. And a couple of lines I drew in were just some what I'd call longer term trend lines anyway with the S&P 500. And what we see right now is that, I kind of drew in a baseline that I assume is kind of the lower end baseline that the market seems to be trending up in here the last 3 years. And then this top seems to be, again, this is the high end top of the trend line, so the downward trend that we've been on the past 5 years or thereabouts. And the reason that this is important is because it's kind of driving us into a position where the market will need to break out into one direction or another. This is called a wedge for those who follow technical analysis. In any event, at the top here I drew in a line. This is the relative strength of the market, and you can see that it has been waning. It's kind of on a downward trend line. But the whole significance of this in this video really is just to show that I think in the short term we'll see things kind of come up at least to that trend line in the relative strength section, which usually would mean that the market would put in some type of a bounce here off those recent lows. It really already has. I mean, that long skinny line right there is actually an intraday low. The market was down to around 1100 at one point last week. And you can see that's up a little bit today, I think around 1.25% or thereabouts so far. As far as my expectations, I would think that we'd come back up the market maybe another somewhere between 4 and 5%. And at that point, it'll either do one of two things, which I've been talking about for a while. It's either going to break out of this pattern and then continue up this trend line that you see going here. That would put the market up nicely perhaps by the end of the year. But if it can't break through that point, then the market would likely break this bottom trend line and go down further. So the best play right now is just don't pay too much attention to all the things on TV and all the things in the paper. The market's just at a very fragile state. The best medicine is keeping a fairly conservative but balanced portfolio. People shouldn't get too frightened or too excited. And then just over the next few weeks, this will all play itself out and tell us a lot more about perhaps where the next longer term trend is going to be, either to the upside or to the downside. So I'll be keeping a close eye on this and sending updates as they're appropriate. May take a couple days off, though, I think, in doing these videos to give everybody a breather from all the emails. Of course, if you have any questions or comments or things like that, there's always a spot on the page where you can just drop a comment in. I've had a few so far that have been very nice, and I'd be happy to reply to those. So have a wonderful week, everybody. Stay in touch if you need any help, but I will probably be back for another video update perhaps towards the end of the week to see where we finish. Thanks again. Have a great day.